So welcome everyone. We have two amazing guests today, Milan and Jeffrey. So Milan, he has 8 years with early stage VC experience, and he has facilitated more than 40 investments across 3 early stage funds. And then we have, Jeffrey Evans, who's a serial entrepreneur. He's founded 5 different startups, and he's a seasoned operator and venture investor. So yes, Milan and Jeffrey, welcome. Perhaps you want to...
Thanks for having us.
What's up?
Great. Perhaps you want to maybe expand a little bit on that brief introduction that I've started with?
Sure. Jeff, you want to go first?
Sure. Yeah. So I am that classic serial entrepreneur. I'm always, every 2 years I seem to be starting something new. But I've done 5 different startups from idea to launch, to fundraise, to growth, to success, to exit. So it's been an exciting journey, and I've always wanted to get sort of deeper full time into the venture space, which I was lucky enough to meet Milan, and we were lucky enough to partner with Alex and Drew, the Chainsmokers, on MANTIS. And it's exciting, and I love this space because we get to spend most of our days talking with people who are wickedly intelligent, smarter than us for sure, that are coming up with ideas and building companies that are going to change the world. And there's just nothing more fun and more exciting than being a part of that.
Amazing.
Yeah, totally. I mean, same here. Like, we're very, very lucky to have met. First of all, Jeffrey and we met probably 3.5 years ago. My background is in venture capital, more traditionally. So we used to work for 2 funds in Silicon Valley, and then ran a startup accelerator program where we did a lot of pre-seed stuff, so super early. And I just had this passion to be like very involved and hands-on as an investor, and guiding companies through the challenges of being an early startup, like pre-Series A. And Jeffrey and we met probably 3.5 years ago. I was looking for someone that has operational experience, being essentially on the other side of the table. And when we met Drew and Alex, it quickly turned out that the boys have been investing in over 20 companies themselves. They're really active and really hands-on angel investors. And so the 4 of us probably spent 1.5 years to get to know each other before starting MANTIS, because, if you start a venture fund with someone, it's kind of like getting married. The fund life cycle is like 10 years, and then, you're going to raise fund 2 and fund 3. So, it was really important for us that we all have the similar attitude towards investing, but also look at companies in a different lens that's really complementary. And that I think is really special across our team, is where all of us have a different perspective on how we view companies and the challenges that they face. And we just all really enjoy our job at MANTIS and speaking to people that are frankly much smarter than us.
Amazing. Just to continue on what you mentioned. So what was the key inspiration that all 4 of you shared when starting this venture fund?
Yeah, I think interesting question. So for us, I mean, as Milan had sort of stated, what we really wanted to do was find an influencer, and we believe that the importance and the power of influencers from the standpoint of branding, marketing, that's going on in the world has been growing for the last decade, but is growing exponentially now. We wanted to find an influencer who was heavily involved in Gen Z, but who was also likely to be doing this if we didn't come to them with the idea. And in the Chainsmokers, we got that because they were in the process of setting up a fund. At the same time, we came to them to talk about potentially setting up a fund. So that was key. Then the second key was to say, we wanted to all find businesses where we could have an actual impact on the business beyond just the dollars that we put into the business. And that's one of the key factors for anything we choose to invest in. I mean, the amount of hours that Milan and me and Alex and Drew have spent on the phone with founders talking about what else can we do? What can we do to help you move the needle? That is not just here's the check, which is key. And knowing that Alex and Drew wanted to do that and be a part of that, and be involved, not just put their name or their face on it, but to actually be involved in both the investment vetting, the investment decisions, and then the post management of the investment and help to the company was key to us. And that's something that we all believed in very much from the start.
Awesome. So in terms of investments, I mean, you guys recently launched and you've made a bunch of investments. Have you made any investments outside of the States?
We did actually, yeah. So we invested in one company that's domiciled in Hyderabad, India. We met the founder during Y Combinator demo day, and the founding team. Both of them are exceptionally smart, and they are essentially building. It's kind of like Shopify for WhatsApp. So having like a shoppable store in India localized on WhatsApp, and we thought the idea is really, really interesting, and super compelling founding team, super driven. And while most of our investments happen to be in the US, just because that's where our network is the strongest and the deal flow is the strongest, we are absolutely optimistic towards other regions. We also invested in a company. It's kind of like Stripe for Pakistan, and same thing. We met them at Y Combinator, and we thought the founding team is absolutely brilliant, and they're also crushing it in that region. And we think that emerging markets in general are really, really interesting. It just really always depends on what kind of edge do we have, right? Like tagging on to what Jeffrey had said a few minutes ago, we have to make sure that we can add value beyond just writing a check. And, those are different challenges in different, other emerging markets around the world. But yeah, we're absolutely open to it.
That's amazing. Now, I mean, one question I have for you guys is, given your mission, like how do you balance, ethics versus economics? Like if a pitch is, ethically sketchy, but can make you $1 billion, is that something, you should say no? Or does your responsibility to your fund's bottom line mean you should say yes? How do you balance that?
I'll let Milan take it first, and then I'll kind of follow.
Yeah, I mean, like for us, it's like obviously we have fiduciary responsibility towards our investors, and we do want to make money, but we are very mission aligned. Everyone on the team is on the same page there. Like we do want to make money, but we also want to do good. So if there's anything ethically questionable, we won't pursue that idea, just because we think that in the long run we're in for the greater good. So we actually have 2 companies in our portfolio that we believe are doing pretty good, are doing something good for the world while having a tremendous upside opportunity. So that's really important for us.
I'll also kind of add to that. We actually, the interesting scenario this week, because we were sitting on an investment call actually yesterday, looking at 3 companies, and all 3 look like great investments. I mean, I wish we could just do everything that looked like a great investment. We have to, can't, unfortunately. But one of the companies we felt was really going to do all great business, but was going to do a lot of good for the world, and create a lot of positivity out there in the world. And that's the one of those 3 in particular. That's the one we chose to invest in, and that wasn't lost on us. That what it was doing really mattered. So it was good. It was doing something good, and it was a good business. Our preference would be to always be involved in things that are doing something good in a good business. And to the specifics of, if it's a really good business but doing bad, we won't do it.
Can you give an example of some of these companies and then what they do exactly?
Yeah, one example would be a company called LoanSnap. We invested in this company. When was that, Jeff? That was probably May.
6 months ago. I think it was April. Yeah.
And we're about to follow on as well. So what they do is it's essentially like an AI-enabled platform that helps promote financial literacy and essentially like helps people with refinancing their existing homes, and then they're going to branch out way beyond that. So it essentially helps consumers to save a lot of money, which I think, especially in this environment, is super important with coronavirus and everything that's going on here in the States. We thought that it's a perfect opportunity for us to invest in a company that's going to have tremendous upside, but also improves the finances of millions of Americans. So we think that's one of those examples, and they're also looking to branch out internationally, which they're already working on partnerships right now.
Got it. Now back to your investment, mantra. How often do you hear a pitch that you find compelling personally, but that would be a bad investment? And what about the reverse? Ideas you find personally repulsive, but would be a great investment. So what do you do in these type of scenarios?
Well, it's actually, I mean, I hate to say it, they're kind of not hard. If it's not going to be a good business, we can't put our investors' money into it. So that may be unfortunate. And we definitely see things that we love a lot. We're like, oh, I love what this guy's trying to do, but I just don't know that the business is going to work. We can't invest in something like that, unfortunately. We can still be supportive to them. in other ways, but you can't put, from a fiduciary standpoint, you can't put people's money into it. And if what the business is doing is making, money hand over fist, but it repulses us, we're not going to invest in it. As much as it seems weird, it's really not that difficult a decision to make. And the good news is the world today, there's no shortage of great ideas and great companies. We are seeing an incredible deal flow, and many more companies we wish we could invest in than we actually can invest in. So we're not sitting there we don't have any place to put our money, and there's this really crappy, jerk of a business that can make us good money. We're seeing good places to put it every single day. So we're not being stuck by that, but we certainly don't want to go down that path.
What is the success rate for companies, that are applying, as a percentage of deal flow that come in to convert?
We invest in?
Yeah.
We'll probably do 40 total deals in this fund, and we'll probably look at 4,000.
Okay. All right. That's quite
but many of them do well, and other people invest. It's just like, every day is 5 or 6 other really interesting deals. Some days are 10 or 20 interesting deals. Okay. A lot of smart people doing a lot of great things out there.
1% success rate and for companies.
Yeah.
All right. Now, this is more for, we have a lot of founders tuning in. And is there an idea or a general area of interest you're dying to hear a good pitch for, but that nobody seems to have nailed yet?
That's a tricky one. We are really opportunistic when it comes to areas or sub verticals of investment. I think one thing that we always get excited about is when we have a founder that solves a problem that they have identified and experienced on a personal level, so they have some sort of emotional connection to it. And when you marry that with exceptional executional abilities, one of the questions that we always ask when we get a pitch is like, why out of all the people on this planet are you the perfect person to execute on this idea? And if that resonates with what they have experienced personally, and if there's some sort of emotional connection, I think it's really interesting. What we don't really like to see is a founder that just identifies a business opportunity and just goes after it just for the money's sake, just because we believe that, over the life cycle of the company, he might not be incentivized enough to really pull it off. Because being a founder comes with a lot of drawbacks, right? You gotta hustle, you can't stop, and there's gonna be times when it's really very, very challenging, and a lot of people are gonna say no to you. And we want people that just grind it all the way through, as opposed to just being after the money and as soon as they don't see a paycheck anymore, they're out.
All right, just to add on to that question, right? So, a lot of founders have access, they understand the importance of storytelling, building that emotional connection with the idea. How would you know if a founder is actually faking it?
Well, it's their job, right? And diligence. I think you can tell people's passion when you're talking to them. It's a little harder right now because a lot of this is done over Zoom. A lot of the decisions are made without actually sitting across the table from somebody. We I don't want to say joked about it, but we raised our entire fund without sitting in anybody's office. We did the entire fundraiser over Zoom, which there's an efficiency to it, but there's also a lost relationship to it. I did think of something. Someone wants to create something I'd love to see. I think there's so much disinformation out there right now. It seems like the right day as the U.S. presidential election is in process with the amount of disinformation that's out there. If someone could create a very easy system so you could tell if the information you're being given or the article you're reading was real or a bunch of made up crap immediately, that would be something that I would want to invest in.
You have Snopes for that.
Yeah, the problem is you have to go to Snopes and see and do whatever. I want real time AI to tell us.
All right, founders out there, you heard that?
There you go.
Business idea.
There you go.
Okay, that's cool. Because I used to run a large co-working space in KL Central, and for me, it was really cool because we could actually see the hardworking founders and the teams that were probably more chill, So I think that is another good data point when people.
Absolutely.
Sense of urgency is vital.
Yeah.
Agreed.
Okay, just to add on, right? What are some of the common mistakes people make when actually pitching to you that you wish they just stopped making?
I think one of the common mistakes that I see is not highlighting the team enough. People just drill down on, the idea and how big the market is. But at the end of the day, for people like us that invest early stage, right? Seed, Series A, Series B, it's at the end of the day, you invest in the founder. You don't really invest in the product because the product can pivot, but the team cannot. So over the life cycle of the company, there's probably going to be a bunch of iterations of what they're actually doing. And so highlighting the team and why the team is the perfect team to execute on that vision is super important. And I wish, there's a lot of founders that actually do, present it very well, but I wish that more founders would highlight that at the beginning of the pitch, as opposed to, throwing a team slide in the appendix or something.
Yeah, to me, what I'd love to see more of is people focus on, honestly focused on who their competitors are and where they're going to beat them. Because I think that it seems to be glossed over and sort of, that's one of our biggest, if you're a founder and you're pitching to us in the vacuum of we're focused on you and your deck and what you're saying, it should look really good. Like there's just no, at that point, if it doesn't blow us away, we're not going to be involved in it. But that's a very, controlled echo chamber. And if I wish founders would spend a little more time saying, hey, these are the people that are most likely to cause trouble for us. And this is how we're better than them and how we're going to beat them. Because we have, that's a lot of the work that we have to do. And then we have to come to those answers on our own. And typically, if we come to those answers on our own, we're not going to know all the rational reasons why someone might beat him. We're just going to go that's a tough guy to beat.
Just to follow up on that. So what do you think startups should actually think about, before contacting a VC? Like what kind of question would actually impress you from a founder?
For me personally, it's actually when they have done their research and they kind of know what our network looks like and when they come to us with a specific ask and saying we think you would be a good strategic partner for us because you can do X, Y, and Z. Versus people that are just hey, this is us and we want some money. It's just it doesn't really help. It doesn't help the company, first of all, because if you're just after the money, you're probably approaching this partnership the wrong way. And it also doesn't help us because it doesn't, really set specific expectations of what they want from a VC.
Cool. Jeffrey, you want to add to that?
Yeah, I mean, there's no any one particular question coming from a VC. I just want them to be buttoned up about, Milan's got a good point. Is that why do they want us to be involved? Is there a rationale or reason beyond just the check? And the check is one reason when people out there pitching and trying to raise money. But do they actually? We consider ourselves a true value add VC, and we want someone to come in and think that, hey, we're talking to you because, which I think is really important. That part is helpful. I mean, the rest of it, they know their business. If they don't know their business, they're done. But they better know their business cold and why they're doing it and what they need. But if they can think more about that they've taken the time to go, we would like you to be involved because we'd like for you to be able to do blank for us, then that means a lot to us.
Would you invest in companies within the same sub-vertical? For example, you invested in LoanSnap, and let's say there's another LoanSnap equivalent in Southeast Asia. Do you have conflict of interest when it comes to investing in similar type of companies, or what's your approach in that sense?
Well, I think, go ahead, Milan, you go first.
Okay. It really just depends. What we don't want to do is invest in competitors. So if, LoanSnap was to try to take on a market and there's another startup in this market trying to do the same thing, we wouldn't do that. That being said, I think there's a lot of opportunity to invest in the same category, but in a way where it's a complementary thing and you can create portfolio synergies later on. I think that's really important. And I think also that doesn't not only make sense from a portfolio construction standpoint, but it also helps out both companies at the end of the day. It's just one of those fine lines that, one really has to make sure to approach appropriately.
Makes sense. All right. What do you reckon are the hottest tech market segments that you're currently looking at as a VC?
I mean, fintech right now is going crazy. Everybody seems to be a better way to do things all over the place. I think that has to do a lot with the legacy companies that are not able to be nimble with new technology and people coming in to want to disrupt. And as we're very focused on Gen Z and businesses that are focused on Gen Z and entire generation that's probably going to never write a check in their entire life, or or play a record, or or maybe even never buy an album, which is really depressing. But the whole different mindset of where they're coming from, and there's just, when it comes to their financial wherewithal, they want it all to be online. They want it all to be in their hand and their phone. And there's just so many opportunities related to that, because once you get a customer that's young and early, you're going to keep them for a long time. So we're seeing a ton in fintech.
Makes sense. Awesome. All right. In terms of, your past investment experience, you guys have been investing quite a fair bit. Like, perhaps could you elaborate a little bit more on, what has been your biggest mistake and lesson learned?
An investing period?
Yeah. Or if you've never made any bad investment, then you can expand it outside of investments.
I've made plenty of bad investments. Maybe not plenty, some bad investments. I mean, I think the biggest mistake is, or the biggest, I used to call it the biggest challenge, because you can't do it, is that there's these different phases, and we're early stage investing from that standpoint. And the challenge is that everything can be set up well, right? So you first have to have a great idea, then you got to build great tech around it, and have a plan for how you're going to monetize, and it can all be set up well and just look so fantastic. But the actual execution of getting to that consumer base, or the growth to get to millions and millions of consumers within your platform, is very hard. And so you can have all those pieces set up properly, and the mistakes are they didn't have the right people to really execute on the operation of this business. They had the tech all in order, but they weren't able to execute on what that plan was in order to grow it. And I think that it's super hard, because we see a lot, especially some very young entrepreneurs who have great ideas from a tech standpoint, that they will say at times, it's great, you need to find that operator to be your partner. That person is going to really help you pull out the X's and O's and make it work. And I think that not within the fund, but I've personally made those mistakes before, where everything checked off, but I didn't know if they were really going to be able to execute it. And then when it came time to do it, they weren't the right team to execute it.
How would you be able to, how would you make an assessment on their ability to execute? And what would be your key data points?
Well, one is that they don't have a blind spot on the execution, which we see a lot of people like, don't worry, we'll handle it. And two, are they willing to bring in people that have experience in executing, not just from a standpoint experience in building the tech. And that to me is the key. When you can talk about how are you going to get from A to Z, how are you going to move from here to here? If all this is great and we believe in this, how are you going to actually do it? And it's not, we see people that come in. Listen, another example of what not to do as a founder, we see people coming with projections that are sort of straight lined. We're going to grow 5% a month for the next 5 years. It's like, that's great, but that's got nothing to do with anything in reality. What are you going to do to be able to do that once you've built the tech? And so for me, are they focused on how they're going to execute it? And I will tell you that a lot are not initially focused on how they're going to execute. They're focused on building the tech. It doesn't mean they're not going to make it there, but I think that's the biggest point of failure in venture, is the inability to execute on the technology build.
So basically what you're saying is they have a great plan, they have great tech, and do they have a good operational plan as well? So it's just purely execution that was lacking.
I've seen that many times. Yeah. Do they have an operational plan? How are they going to build this? What's it going to take? We saw a company recently that we ended up passing on, and I don't want to talk about the specifics of the company, but that they were going to build they had the concept of an incredible idea and organization, but we looked at it and said, in order to service the number of customers that are in their projection, they're going to probably need 100 FTEs on the servicing side of this business. And when we asked them about it, they were like, no big deal. And I'm like, that in itself was enough for me to go, they're not going to get there in the end. They're going to have to bring other people to do it.
Okay,
I'm afraid that's all the time we have today. So yeah, last question, closing remarks. Thank you.
Just more closing remarks for all the founders tuning in from both Milan and Jeffrey.
Wait, sorry, could you repeat that? My bad.
Any parting words for the founders and corporates tuning in?
I mean, never give up and never be hesitant to reach out to anyone that you want to partner up with. I think, persistence is key in business and also personal life. So, just keep hustling.
So it's all about the hustle. I mean, especially when it comes to the fundraise, right? So you can, you can have 50 people say no, and if one says yes, then you're good when it comes to that side. And so it's just always about I have a great, my best analogy, and I don't know if people know it for an entrepreneur, it has to do with, are you familiar with the Roadrunner Coyote cartoons from the United States or no?
Yeah.
So what happens is the Roadrunner jumps up in the air and the feet start spinning. The coyote's sitting there with a fork and a knife about to eat him. And the Roadrunner is floating in the air and his feet are spinning and spinning. And then he hits the ground. And before the coyote can close the fork and knife on him, he's over the hill and gone. And I say that's really the entrepreneur, is that you have to jump in the air and sprint as fast as you can. And when people are telling you it's not going to work, if you stop at any point in time, you will hit the ground and you will be eaten alive and done. But if you keep running, there'll be this point where it clicks and it catches, and then you'll be over the hill off to your success. So you just got to keep running when everyone around you is telling you to stop.
Awesome, man. Thanks so much, Jeffrey. Thanks, Milan, for your time. Great session.
Thanks, pleasure.